Big names here reporting. We are seeing stocks moving in the opposite direction. Let's start with the one that's under pressure here. Microsoft, we're seeing a beat on the top and bottom line here, but it is about the decelerating growth here, particularly around cloud. What's your takeaway on that front?
Well, first of all, Azure was the main focus here. They had guided 26 to 27%. They came in at 27%. I think a lot of people were looking for a higher number, deliver on Gen AI, on loads of Gen AI. It's very obvious that the enterprise now is still in this optimization stage of looking at their cloud spend. So that's a little bit disappointing, and people are looking at a higher number there.
Is it unrealistic of investors to expect, though, a monetization of generative AI this soon in the game for even a powerhouse like Microsoft?
That's the right point. But, Satya has been very, very aggressive in his narrative on OpenAI. And I think people were looking for a little bit better on those loads. Generative AI it's not a flip of the switch. And you asked the right question. These are re-architectures of data stacks and infrastructure, and it does take a long time. So, you can look about a year out and you'll start to see it hit the model. But, there is a fair amount of high expectations with Microsoft being up 46% year to date.
Yeah, and Ted, you could argue maybe a slight pullback is needed given the excitement.
Healthy.
A healthy pullback, we should say. When you look at Microsoft, always a good pulse of just where enterprise is spending right now. Given the deceleration we've seen on that front as well, what does that tell you about where companies are putting their money?
I think this is the optimization trade. Everybody's really looking at their IT budgets pretty aggressively. That's nothing new. With our conversations with CIOs, Microsoft is kind of the Death Star of technology. They are swimming totally out of their lanes. They're innovating faster than anybody else. They're using their $17 billion cash flow per quarter to really integrate AI into areas like development tools on GitHub, which I think is going to be very strong, as well as moving into security. So when I talk to CEOs or our analyst tech team talk to CEOs, one thing comes out. Microsoft is becoming a line item in budgets. And I think along with every single company in tech, those IT budgets are not infinite, especially in 23.
I think something that you just alluded to is really noteworthy here, in that we've moved past this kind of hype phase or narrative selling cycle, or part of the cycle for generative AI, and for a lot of tech companies and even non-tech companies that had said that they were going to be able to benefit and leverage from it. No doubt that could be true, but now that we're in the prove it phase, how many other companies kind of across the spectrum here could be set to face some tough questions from investors and ultimately perhaps see their stock prices react in tandem?
That's the right question. I mean, I sit on over 70 calls a quarter on tech, and I'd say 90% of the CEOs are saying they're generative AI companies. Some are, and some are somewhat imposters. And I think you're going to see the companies where the emperors don't have clothes, and then the companies taking massive share. It's more of a platform sell, and there's some infrastructure picks and shovels that are going to do extremely well. But not everybody is going to catch this wave. It takes a lot of free cash flow and a lot of engineers.
Finally, Ted, we're watching shares of Alphabet moving in the opposite direction. Certainly a number of things to hit on in terms of what investors are watching there. It is the monetization of their AI technology. It's also about the growth they've seen in YouTube and digital ad spend. What's the one that you think really is leading to these gains? I mean, to what extent is a 6% pop here justified?
It's, if you look at Google's up, I want to say about 39% year to date. So it's a little bit below the Microsoft gains, but it's all advertising. Advertising last quarter was somewhat muted, and this improvement on advertising is noteworthy. Also, I think as if you look at GCP, which is their cloud offering, it's solid growth of, call it 28%. So they're one of the big three between Amazon and Microsoft, and very, very poised from a cloud standpoint. It's an engineering company. And I think some of the Gen AI, privates are using GCP because it's much more flexible on APIs. And quite frankly, they've been a pioneer for a long time on AI infrastructure.
Just lastly, while we have you here, Ted, I mean, the street has become used to hearing from Ruth Porat in one facet or another, and now there's going to be transition as the search commences for a new chief financial officer. What do you believe this next iteration of that position particularly could hold? Is it one of kind of extreme cost measurement, even more so than Ruth has done over the years, and having to monitor where some of that spend is going out the door and where they're able to monetize very well-oiled parts of their business?
She's one of the best CFOs in the business, if not, the top 5 CFOs in the business. And the investor community had a tremendous amount of trust with her. She was very much of a straight shooter and quite frankly, had a very good command of the numbers. So the person coming in is going to have to be that type of person. CFO communication is key with the institutional market. And, Google's going to have a hard role to find to really take advantage of having Ruth in the seat for so many years. It's been a blessing for the company. She's an all-world CFO.
Certainly have been at the helm, the steady hand at the helm for many, many years. Ted Mortonson, it's good to talk to you today. Appreciate your insight.
Okay. All right. Have a good afternoon.